ambiguous, if I can put it like that. It's a little bit ambiguous when they're saying principles of business and the role of information technology. So technically, what they're just saying here is, um, what is the role of technology in business, and what are the principles of business? So basically, we want to explain what the principles of business are and what is the role of technology in a business setting. So what do we use that technology for? So the purpose here of this standard unit here is to provide conceptual knowledge of the areas covered, of which we're going to cover those areas there. Sorry. Someone said something. Hello. Okay. So anyway, I was saying that, and then for those working, entering the business in the area of information technology, so this is what we're looking at, and which is basically covers most of you guys here. You are entering that working space there in IT, and then like what type of knowledge do you need? Because it is not enough. Like for instance, isn't you guys are what you call software developers? And one thing about being a software developer is it is never enough to just to know the software development side. There's a lot that has to do with software developers. There's a lot of information. There's a lot of things that you have to look at. So now, if there's a lot of things that you have to look at being a software developer, and then what else do you need? So you need to understand, especially how businesses also operate. For instance, I know most of you guys here would want maybe to start a personal venture at one point. And then if you want to start a personal, or like what most developers do is usually they run their own businesses on the side. As much as they are working for someone on the side, they are also freelancing. It's called freelancing. So, and then now you need to understand how to the business side of things, how it simply works. So now people created with this unit, they are supposed to be able to do a bunch of things here, describe fundamental business concepts. This is what we're looking at now. And then describe the system theory with respect to information systems, explain how IT is used in businesses, explain the relationship between a business and its data requirements, very important, and then the performance of all elements to a standard that allows for further learning, especially when it comes to this particular area here. Just give me a second. Sorry guys, I'm back. So now, I was saying that here, we're also looking at but the elements, they're saying that the performance of all the elements to a standard that allow for further learning in this area. Like a lot of the things that you'll be doing basically is what you call persons that you'll be learning as you go throughout this entire module there. So now the first thing that we're starting on a specific outcome here is the fundamental business concepts. So this is where we're starting on. And this is not something that is new to you guys. So I'm pretty sure that you guys are very vexed when it comes to this information here. So, which is more like revision, because you have covered a certain part of this. If you didn't cover it now, you probably covered it in business studies if you did business studies. If not, and then you covered it in EMS when you were doing your grade 8, grade 9. I don't know when that was, but you did some of these items there. So the first thing that we'll be looking at there is um, description distinguishes the types of business organizations. So we're looking at the types of business organizations there. We're also going to look at the common objectives within within which businesses operate, and then we're also going to look at the outlines or the environment within which businesses operate. So this is the first part. So technically now the first part is us introducing the business world before we even talk about the information technology aspect. We have to introduce the business world. Now, if we're introducing the business world, the first thing that we look at here are the types of the businesses. Now, how many types of businesses do we have? Especially if you're working, if you decide to open a business, then like when you're opening, what type of business are you going to choose? So now, from a legal point of view, according to the South African perspective, there's 4 types of businesses that we operate. There's the first one that is called a sole trader. Then the second one that is called a partnership. Then there's something called a corporation. And then there's something called a cooperative. Now, all of these businesses here, they operate very, very differently. The way that they operate is very different. And besides them being different, also there are certain advantages and disadvantages that are associated with each and every form of business that you choose them. So now, starting with proprietorship here. Now, when it comes to sole proprietorship, they're saying that this year is the simplest way to set up a business. So like, okay, now when you're saying sole comes from the word one, isn't it? Alone, and then proprietorship. So which means then here you're dealing with a business that is literally operated by one person. Hence here, they're saying that a sole proprietor is fully responsible for all the debts and obligations related to his or her business. That is what I saw. So like each and everything that happens in that business, because this business is a business that is owned by one person. Now, that particular person that owns this particular business here is responsible for each and everything that happens in that business. Even if there's debts that are involved, they are solely responsible for that. Sorry about that, guys. So now back here. So we're saying that a sole proprietorship is that person that is running a business on their own because the business is registered under that one particular person. So which means even the debt and the obligations that are related to that business, they all belong on you. So if your business chooses to close one day or is liquidated for some reason, and then you as the operator of a sole proprietorship, you are going to inherit also the debt. So which means now you're covering or your liability. I'm going to talk about this part here when they're talking about liability here. You're covering all your liability. Like you're not protected at all. Even things that are in your house, actually, they also brought into this particular segment here. So now remember, I'm not saying that if you are running a business on your own, it's literally a sole proprietorship. Because when you're registering a business, you can choose whether to register it as a sole proprietorship or not. But now you can also like register a company alone, and then it can be something else. It can be given a certain name and stuff. But like one thing that we know about a sole proprietorship is that it's a business that is run by that one person, and the person that runs that business is the one who's responsible for each and everything that happens in that business. Now, notice here, it's saying that a creditor can claim against a sole proprietor. With a claim against a sole proprietor is a right against all his or her assets, whether business or personal. See, this is what I was talking about. So this is known as unlimited liability. So technically, a person that runs a sole proprietorship, a person that runs a sole proprietorship here does not have any liability, any limited liability. Your liability is not limited to the business only, but your liability extends also into your house. So which means if you're running that kind of business, sole proprietorship, for instance, and then you incur some debt, and then something happens in your business and you are not able to pay off that debt. So now whoever now has got a claim against you, those creditors that have claims against you, they can even come into your house and get your fridge, your TVs and stuff, so as to pay back whatever that you took from them. That's how far the liability can go. So if let's say you lose a court case or something happened, and then you lose a court case, and then people were suing you maybe for something that you did that you or you promised that you're going to do, then at the end of the day you didn't do, and then when the court says okay fine, you can get whatever that you need to get from this person. So if they go to your business and sell your assets and your assets are not enough to cover up whatever arrangement or whatever payment that is to be paid, and then they have to come into your house, they also sell some of the things that you have so as to fulfill the needs that they have. So that is one of the biggest disadvantages this business has. As much as you are responsible for everything else, like you make your own decisions, your profits are yours 100% and everything, those are some of the advantages. But the disadvantage, the main disadvantage is that you have unlimited liability. And then this type of business comes under provincial jurisdiction. And then if the proprietor chooses to carry on a business under a name other than his or her own, he or she must register with the province. Your name, your business name, or renewal of registration will be valid for a certain number of years. If a sole proprietor establishes a business in his or her name without adding other words, it is not necessary to register a business. You notice here, you don't really need to register this business with CIPRO or anything. Like as long as you're operating under your name. Let's say your name is what name can I use? Like Busisiwe Khoza, for instance. And then you decide to run your business as Busisiwe Khoza. Necessarily, you don't need to register that business because that is a sole proprietorship. You can even write outside and you put like sort of a logo outside and then say this is a sole proprietorship. And then even if you are registering with for tax, you can even claim tax as an individual instead of a business because it's a sole proprietorship, it's your own thing. But remember, like especially nowadays, it is always recommended that you register any kind of business that you run, whether sole proprietorship or not. But the bottom line here, the point that we're trying to push forward is that it is not necessary to register as long as you're running the business under your name, under your legal name. But if you choose to use maybe like something like a pseudonym or a nickname, then you have to register it. But if not, and then you don't really need to register that business. And then Marcia.
Sorry, sir.
Thank you. And then the next business here, we've got something called a partnership. Now, as the name suggests, like the first one was sole, which means for one, partnership, which means here we're talking about two or more people, isn't it? So, which means now when you're talking about a partnership, this is an agreement that exists between two or more persons that combine their resources in a business in order to establish terms of the business and to protect the partners or shareholders in the event of disagreement or dissolutions of the business. A partnership agreement should be drawn up. So now, and then the partners also they share profits according to the agreement. So one thing that we need to understand about a partnership are one is that a partnership is an agreement or an agreement. Let me put like that, proper English word. It's an agreement, and then it's an agreement between two or more persons, and that combine to share their resources in a business. We know that. And another thing is that now these people that agree on something, they have to sign something called a partnership or shareholders agreement. They have to sign something like that. And profits are shared according to that particular agreement. So now that is what makes up a partnership. One is a partnership is an agreement between two or more people that combine their resources to form a business. But for that partnership to work, there has to be an agreement between the partners. And then that agreement is the one that helps, especially solve a lot of problems. Like we have had a lot of people that come and probably they come together and then they have some sort of a handshake deal when it comes to business. And then you hear someone sometime later coming and say, yo, that person was so unreliable. I did business with them. They did me dirty. They took all the money, or they did this, or they did that. See, that's basically supposed to show you that whoever the person had an agreement with, the agreement was in black and white. Because if the agreement is in black and white, that case can stand in court and no one can steal or no one can take advantage of the other person. Because if ever something like that happens, you can always go back to court and the court will go back and they're going to cover up whatever that you lost. But if you see that you're running a business with someone and then the person or the persons, they take you for granted and then they disappear with the profits and stuff like that, and then which means there's something that you didn't do right, because there has to be an agreement or an agreement. This agreement here is the one that is actually going to help you in terms of solve the problems or solve the problems or any kind of disagreement that you guys have. And also, if you need to close down the business, also that particular partnership agreement has to cover that aspect of dissolution there. What happens if one decides to say, okay, I'm done with this business, or if one of the partner dies, or if one of the partner decides that they want to sell their part of the business. So all of that stuff has to be covered in the partner agreement here, the partnership agreement. So now, and then there are different versions of these agreements here. You've got what they call a general partnership, and you've got what they call a limited partnership. A general partnership here, in this partnership, all members share the same management of the business, and each person is liable for all the debts and obligations of the business. That means that each partner is responsible for and must assume the consequences of the actions of the other partners. So here in the general partnership is if one partner messes up, if you have a general partnership, which means if one partner messes up in the business here and you get sued, for instance, and then you have to pay back. So which means now everyone is going to be actually involved in that. Everyone is going to be involved in that. So which means also you yourself, even if you did not do anything, you're still liable to actually pay back whatever. Um, Now, and then the second aspect of the partnership here is something called a limited partnership. Now, with a limited partnership, is that um, now here you are limiting liability. That is the only thing that you are simply doing. You're limiting liability. And unlike here in the general partnership, you do not limit liability. Everyone is liable for something. So whatever that happens, whatever business decision that you guys make in that general partnership, everyone is going to be liable for that. If ever there is money that needs to be paid, everyone has to contribute. If you need to go to court, which means all of you are going to go to court because of your of the partnership agreement that you guys signed. But when it comes to a limited now, a limited liability now is very stipulative and it's very direct because now it controls certain aspects of the business. Like here, they're saying that some members of the general partnership who control and manage the business may be entitled to a greater share of the profits, while other members are limited and contribute only capital. So limited partnership take no part limited partners, they take no part in the control or management and are liable for the debts to a specific extent only. And the legal document or outlining specific requirements must be drawn up for a limited partnership. So usually now we mostly use a limited partnership when you're dealing with a lot of investors. So sometimes, let's say you start your own business venture, for instance, you start as a sole trader and then sometime later and then you realize that you need more money to be put in the business and then you go and you look for an investor and then that investor comes and says, okay, for me to invest in your business, I need us to register this business, I need us to sign an agreement. Then in that agreement that we sign, I want us to talk about profit sharing, how the business is going to be run and everything else, how the profits are going to be shared and things like that. And then afterwards, you have registered the business, you put both your names in, and then you have spoken about profit sharing, about the day-to-day running of the business and everything else. So that is where your investor comes in. And let's say now you are responsible for the day-to-day running. The investors, their job is simple to come in and bring money into the company. So if anything happens in that kind of scenario, the limited partner, which is the investor in this case, is going to be protected because they are not taking part in the control or the management of the business affairs. But you, as the partner who is running the business, you are going to be the one that actually takes all the liability that has to deal with business. So this is one thing that you also need to be aware of, especially if you're dealing with that. So because if anything happens, only you are liable, the investor is not. The investor is only might be liable to a certain extent, maybe for instance, then they just look at how the business is run and say, okay, since your investor here only contributes money, and then for instance, this thing happened because of operations, and then they can say, okay, the investor will be excluded, but you have to take the fall. I'm pretty sure you have seen this happening a lot, especially with a lot of companies. If you really follow like uh, like documents in the court systems. If you go through documents in the court systems, you find that a lot. A lot of businesses here, they are actually, especially a lot of people that are running businesses, partners, they find themselves in a certain space where they would have thought initially that they are with probably their investors and stuff in anything, and then only to discover that the investors are actually protected, but only them are actually the ones that are liable for any business deal that they make. So you need to be aware of that. And then next up is a corporation. Now, a corporation is a legal entity that is separate from its owners. See, now, no thing is only thing with a corporation. A corporation is basically that. It's a legal entity. It's a business that is separated from its owners. Excuse me. It's very separated. It's very separated from its owners. Um, and then the owners here are usually called the shareholders. And then no shareholder of a corporation is personally liable for the debts, obligations, or actions of the corporation. And this type of business can be incorporated at either federal or provincial level. So now, when it comes to corporations now, these businesses here, they are literally run by these so-called shareholders that those are the ones that usually appoint the CEOs, especially in businesses and things like that. And now the shareholders are not liable for anything. They will never be liable for anything because they are protected, in this case here, by that article of corporation. They call it an article of corporation. And that article of corporation, it shields it separates their personal life from their business life. So whatever happens in the business is for the business. If the business decides to close down or it suffers so many losses that it goes into debt, and now they have to file for bankruptcy and things like that. Now, no one is going to attach your personal belongings. No one is going to attach anything that belongs to you because you're you're not liable for anything. A corporation is identified by the terms LTD or limited, or incorporated, or which means INC. I'm pretty sure you've seen that. And then there's also corporation or corp. So whatever the term, it must appear with the corporate name on all documents, stationery, etc. I'm pretty sure you've seen a lot of companies with what LTD, what INC, um, something corp. So now that depends with whatever corporation that you're dealing with them. And then in these corporations, you've got what they call a private corporation and a public corporation. A private corporation can be formed by one or more people. Hear that? Even one person can form a private corporation. The majority of its directors must be okay. Here they're dealing with a Canadian system here, but here in South Africa, the majority of the directors or the shareholders in any corporation, it has to be a South African. They have to be South Africans. Even though, like I've actually noticed that now you can open a company, like almost anyone can open a company. So I'm not so sure now, like how it works, especially in terms of registrations and stuff. I think anyone now can open one because I think I've seen something like that, but I'm not so sure. But initially, my understanding was a lot of these private corporations can be run by someone with an IT. That's one thing that I know. So yeah, if ever there is anything, you guys can always stand corrected on that. And then the corporation must appoint a power of attorney who resides in the. For instance, if let's say um, uh, I open a company and I am not here in South Africa, and then I open a company. I'm a South African, and I don't stay in South Africa, but I stay maybe let's say in UK or somewhere in Europe, and then but I'm running a company here. Then if I'm running a company here, I have to appoint a power of attorney who resides in the country here in South Africa. Because if ever there is anything that needs to be signed or anything, the person that can sign on my behalf is the person that has got power of attorney. Anyone else cannot sign. Even if it's a CEO of that kind of that business that I've appointed myself, they cannot sign anything without the power of attorney. Unless if I appoint that CEO and give them the power of attorney, then that's when they can literally sign anything on my behalf, even either bank and anything else. So you need a power of attorney for you to sign anything if you're not the owner of that particular business. And then a public corporate. Oh, and another thing is a private corporation cannot sell their shares to the general public. You can't sell your shares. You can't list them on the JSE, in this case, Johannesburg Stock Exchange. You can't list because you're running a private corporation. But a public corporation, with a public corporation now, you are actually allowed to sell your shares or securities on the Johannesburg Stock Exchange, or you can sell it to the public, depending on whom you want to sell it to. Depending on who you want to sell it to. Just 1 second. So, do you have any questions so far? Oh, we okay. Since you guys decided to commute on me today. Hi,
No
Yolanda.
questions, sir.
Thank you, Busi. Hi, Yolanda. How are you? See, some of you guys, you are here, but you are not here.
We are here, Mr. Tupu.
Okay, Lapange.
Can you hear me, sir?
Yes, I can.
My network is bad.
Okay.
Did you have a question, Mr. Tusi?
No, I was asking if you guys have any questions or any comments or any corrections. But seems like you guys are okay. So I will proceed.
No questions, sir. We are following.
Okay, thank you. So now, as I was saying that in a public corporation here, we know that there's a document of incorporation that has to be filled, and then the public corporation must provide a prospectus. Like basically now, when they're talking about a prospectus, they're talking about a document that shows everything that the company has or that they have to offer, including their securities and things like that. And then they also have to employ outside auditors, and then they also have to distribute in that prospectus. They also have to distribute financial statements, usually done at least twice a year for most companies. They have to be doing that, so that like when you're selling your shares to the public need to be aware of what is happening in that particular company before they can buy anything. Because imagine now you go and buy shares in a company that's dying. So you need to know what exactly you're putting yourself into. And then the last company is called a cooperative. A cooperative now is a corporation organized and controlled by its members who pool resources to provide themselves and their patrons with goods, services, and benefits. Usually, if we are dealing with cooperatives usually get them in places like, I don't want to appear as if okay. Let me not say that. I'm trying to look for a better example that doesn't stigmatize. So I think like have you guys seen these things, like for instance like vegetable gardens in the especially if you go to Ezlalini and stuff like that. So you notice that there's vegetable gardens that they have for the community and things like that. Then that is managed by the community. And most of the times when they register those things, they register them as cooperative. Something, maybe Sizana Song, a cooperative, something like that. Or Ubuntu cooperative, things like that. You see, so now a cooperative there is that now you've got this group of people from a certain community and they come together and say, okay, we're going to farm here. And then after farming, we're going to be selling whatever that we sell. And then when we sell whatever that we sell, and then we're going to share the profits, or depending, or maybe they might have that piece of land where they contribute to pay and stuff. And then whatever that they sell individually. But at the end of the day, in a cooperative is that one thing about the business structure is that it's a very democratic business structure. Everyone has to vote. Every member has to vote, and every member is actually equal. And also, and then there's open and voluntary memberships. That is most times in cooperative. There are other people that don't really benefit much from it, but because they can volunteer, and then they get those voluntary memberships there. And then also there's what they call patronage dividends. Patronage dividends is that everyone who's part of that can earn dividends. Depending on the structure of that cooperative, you can earn dividends or not. So it all depends. So there are times when you can earn dividends, there are times when you cannot earn any dividends at all. So these are the four the types of business that we deal with: sole proprietorship, then we've got a partnership, then we've got a corporation, and then we've got a cooperative. So all these four, as I said, that they've got their own advantages and their own disadvantages. Now, if you look at the advantages and disadvantages here, advantages of a sole proprietorship listed here: relative low setup costs. Because if it's a sole proprietorship, you can even start it from your own bedroom, from the garage. Like these are the big companies that started from the garages and stuff. See, because like you don't really need a lot of money for you to start this business, because you can only start it on your own. And then greatest freedom from regulation. You are not regulated at all. And most times you don't even pay tax in these sole proprietorships. Because remember, tax is relevant to your income. So if your income doesn't reach the tax threshold, which means you're literally, your business is actually exempt from paying tax. And then also, that's hence saying great freedom from regulation there. You're less regulated compared to others, where they have to sign documents, they have to have this document, that document, and this and that. Here you just need your ID, and then that's it. And then also owner indirect control of decision making. Owner indirect control of decision making. The owner has direct control of decision making. That decision making, you have direct control of it. So you make the decisions. You are responsible for that. And then no one can come and argue with you over the business decisions that you make, because it's your business. You are running it however you want. And then minimal working capital required, which is basically the same as the low startup cost there. Like, we don't need a lot of money for you to start this particular business there. And then there's tax advantages to owner. Speaking about this also, that there's tax advantages to the owner. You do not pay a lot of tax. There's very, very minimum amount of tax that you actually pay. And then also they're saying that all profits to owner. The owner has got all the profits. The owner has all the profits. All the profits that come to the owner. And then the disadvantages, unlimited liability. I spoke about that. And then also lack of continuity in a business in the absence of the owner, of which this is one of the biggest problems that we have a lot with these sole proprietorships there. Is that most of the times, if the business owner is not there, the business doesn't even run, because the owner runs everything. So if, let's say, you as a developer, you develop, you manage, you pay the people that you're working with, it's like everything rotates around you. So the day when you are not there, which means the business also cannot run, because everything is run by the owner. So that is one of the biggest disadvantages there also. And then also difficult in raising capital. It's so difficult to raise capital for a sole proprietorship. It's very, very difficult to raise capital, because you don't really inspire a lot of confidence, especially when it comes to the stakeholder, to the shareholders and investors. And then two, then the partnership. The disadvantages and advantages. The disadvantages in the partnership is ease of formation. I mean, that's the advantage. Ease of formation, so easy to form it. And sorry. Relatively low startup cost, almost the same as a sole proprietorship, because remember, it's two individuals coming together here, pooling resources to start up, so they don't really need a lot of capital. And then, but now the advantage is that because it's two or more people that are coming in together, which means there's even more sources of investment capital, there's more money that can come in, there's more possibility that a lot of money can come in because of the involvement of many other people that you have. And then also possible tax advantages. Chances are limited regulation. There is still regulation, but it's a little bit less compared to these other corporations there. And then broader management base. Like when I say broader management base, is that like instead of in the sole proprietorship where you had one in terms of management, here you've got a broader management base. You've got more people that actually do the management of the business. And then even decision making here is a little bit wider, and it's the decisions that you can make more decisions that actually make more sense than when you are running a company on your own. And then disadvantages. Now, when it comes to disadvantages, one is still the disadvantage that is still the problem here is the unlimited liability, as like previously with Sol. Unlimited liability then. And then number two is lack of continuity, almost the same. Because like remember, if it's a partnership between two people or even three people, if one of the person maybe let's say dies or decides to move, that business there, because it was a partnership, it has to be amended. It has to be amended. So literally there's lack of continuity. If one of the partners leaves or dies or something, there's lack of continuity unless someone else comes in their place. But otherwise, the business cannot continue, especially under the same name or the same format, because it's a partnership between those three people there that signed an agreement between the three of them or two of them or five of them, depending. And then also divided authority. That is a disadvantage there, because like remember now, unlike in a sole proprietorship where you had one owner who was running their own business, making their own mistakes or their own good decisions. Now here you have divided authority. You have so many people that are capable of making decisions. So it means takes it takes a little bit longer also to reach certain decisions, because everyone has to agree on those particular decisions that you're taking. Everyone has to agree. And then also difficult in raising additional capital, it's almost similar to the first one there. And then hard to find suitable partners. And I think this one was supposed to be at the very top there. It's very difficult to find suitable partners, especially people that you can trust, people that can work the same or that have got the same mindset that you have. It's so difficult for you to find such. So it takes a little bit longer for you to find people that you can trust and work with. And also possible development of conflict between partners. And there's always conflicts between partners there because of separate understanding and clashes and things like that. And then with corporations, advantages, disadvantages, cooperative advantages and disadvantages there. With corporation now, advantages, limited liability, we know, specialized management, as we say that now this here is a little bit bigger. So now most of the times when you're involving shareholders and things like that, now people need to know how their money is being used and stuff, and they want someone who's competent, who knows what they're doing, hence the specialized management there. And then ownership is transferable. See, with a corporation, unlike with a partnership, if one of the partner dies, then you can't transfer that ownership. You can't transfer that and say, okay, that's this part because this one person is gone or the other person moved and things like that, and then you want to transfer. You can't transfer in a partnership. In a partnership, you just have to dissolve the whole partnership and start afresh. But unlike in a corporation, the corporation you can simply transfer ownership. If I do not want the company anymore, I can sell the company to someone else. Then they continue with the company as if it was theirs to begin with. And then continuous existence, we spoke about that. Separate legal entity because of that limited liability there. A corporation is a separate legal entity. Any person that starts a company as a corporation, they're already separated from that company. That company is not them and they are not the company. See, hence, most of the times this is difficult to get any funds from a corporation. If you register your company as a corporation, it is very difficult just to get funds at any time because there's a lot of steps, especially imagine if there's 2 or 3 people involved in a corporation. So it means you need to get all their signatures and things like that for you to get the money there. So, which is actually good in terms of the business side of things. And then possible tax advantage, and then easier to raise capital. It is easier to raise capital for a corporation because it inspires a little bit of confidence in the investor side. And then the disadvantage is that corporations are closely regulated. Like for instance, if it's a public corporation, there has to be a lot of documents that have to be signed, incorporated documents, this and that. All of those documents that have to be signed, given out to people so that they can view and things like that. That is regulation. Then these businesses there, they are watched very, very well. And then they have to be audited and things like that. Those are the regulations that we're talking about there. And then it is expensive to form organize, very expensive to form organize a corporation. It is very expensive there. There is also charter restrictions. So there's a document that actually restricts certain aspects of your business as to what you can do, how you sell your shares, how you buy your shares, how you do this and that. There's always that. And then extensive record keeping necessary. You need to keep proper record keeping. Hence, I spoke about the auditors there. So when auditors are coming, they need to see that proper record keeping. Otherwise, it's going to be a problem. And then double taxation of dividends. Dividends are taxed double. They're taxed double, which is a lot of money, really. But that's how dividends are. They're taxed double. And then possible development of conflicts between shareholders and executives. And this one here, and there's a possible development of conflict between shareholders and executives there. So there is that possibility that shareholders and executives are going to fight, especially regarding, like, imagine now if the executives, they say, okay, you want um, to sign, or you, like, there's certain things that you want to sell, but then the shareholders are like, no, but you're already like, you've already blown your production, maybe production budget and things like that. And then there's always those hiccups that come because of misunderstandings and things like that. Now, with cooperatives, the advantage is cooperatives are owned and controlled by their members. And then there's a democratic voting purpose. There's a democratic voting process because everyone votes. And then there is limited liability. And then there is profit distribution there for the members there. But the disadvantage is that possible development of conflict between the members, obviously, it's a business. It's going to happen one way or the other. It's going to happen. People always argue, always disagree. And then longer decision-making process. Like, remember, the more people involved, the longer the decision process becomes. And like, if it's one person can always reach a decision in 5 minutes. They can even decide whenever they are sleeping at home there, they wake up in the morning, I'm like, today I want to change the name of my business. Then they can just go and do that. But if you're dealing with a corporate, like, something that takes time, people have to sit down, people have to vote. Sometimes the votes might be split right in the middle, and then there's no decision that is taken until another voting process happens, of which it doesn't happen just overnight, just like that. And then participation of members is required for success. So with a cooperative, everyone needs to contribute. Everyone needs to participate for this business to be successful. Otherwise, this business model is very, very difficult to establish, because people, they've got various things that they do. They think differently and things like that. And also less incentive to invest additional capital. Like, you do not really have incentive to invest additional capital, because most of the times you notice that a lot of people are very skeptical, especially when they're dealing with cooperatives. That's why if you check, most of the investors when it comes to cooperatives are NGOs. It's not really people that are running like these capitalistic kind of companies and stuff. It's difficult to get investors to invest in a cooperative, because people do not really benefit much from them. And then now, common objectives within which businesses operate. So now, what are the objectives within businesses operate? So now, businesses, they operate to, one, increase market share. Now, increasing market share is simply like, in order to grow a business, needs to increase its share of the competitive markets. Market plans start with the overall strategic business plan of a company, but explain further how specific aims will be carried out. Marketing plans address this through defining product and service offerings. So anyway, now, one thing is, a business needs to increase its market share or its presence in the market. That's what a business needs to do. And how to do that? There are various ways there that you can do that. You can formulate a marketing plan there, and then that shows the different things that you do. But always increase your market share. Increase the market share. That is one way that you can, when you need to operate, any business needs to increase its market share. That's how a business grows anyway. And then two, strengthening financial resources. Now, by strengthening financial resources now, what exactly are we saying here? So if the company's financial resources are strong, capital could conceivable come from cash reserves, from cash reserves. See, like now, most what most people usually neglect in companies is um this art here of availing the capital resources to ensure the future expansion of a business. So most people like they work in some kind of hand to mouth kind of way, whereby they wait month end clients pay, and then from there, then they take that money, and then they do APC, and then they wait again. So they do not really have cash reserves and stuff, cash reserves, sorry, and stuff. So now, for you to be able to attract investors, for you to be able to attract investors, for you to be able to attract creditors to come and fund your business or your company, what you need to do is to strengthen your financial resources. Make sure that you've got capital that is available, and so that anytime, whenever people want to come to you and ask you, like, do you have capital? Do you have this? Do you have that? Everything is there. And then physical resources. Now, a company that to companies that produce tangible products, physical resources could mean plant, machinery, and equipment in like in etc. And then there are other companies, for instance, the ones that do not produce any tangible resources, like for instance banks. Banks will need things like ATMs, will need things like branches and things like that. That's what they will need, bank cards. So those are physical resources. Like each and every company needs to have physical resources for it to be able to deal um, or produce a better product or produce a better service. It needs to have those physical resources there. It helps a company grow. And then there is productivity. For any organizations, productivity means fine-tuning a business process to achieve the best results for a customer while increasing profit. Like I've noticed that, especially when it comes to productivity, a lot more companies, they thrive for quantity more than quality. But when it comes to productivity, productivity mostly deals with a balance with both quality and quantity. Increase productivity, which means produce more. But even if you're producing more, also um, do it in such a way that you are going to earn a profit. At the same time, you are going to give the best results to your customer. That is mostly that what you deal with, especially if you're dealing with productivity there. So one thing is reduce wasting, reduce the production time, even production costs. Try to reduce most of these things there, but also at the same time try to produce whatever that you're producing faster. If it means, that is why if you check most of companies now, for them to increase productivity, they make use of robots for them to be able to do that. And then there's something called innovation. Now, innovation is a goal that helps a business stay ahead of the competition, placing resources into research and development to create a new product. See, like or better service there. So now, when it comes to innovation, is you need to be very innovative in business. You need to be very innovative. Stay ahead of the competition. Stay abreast each and every time, and then offer a service that is better. Offer a service that is better, so that you can also grow in in your business there. And then action planning. Now, a business cannot move forward without defining specific action steps to take uh, them towards their goals and identify business objectives. So each and every business is supposed to have something called an action plan. So an action plan is basically based on what they call SMART goals. That is what an action plan is based on. So, and then now, all everything that you do in a business there, it has to be designed around your action plan. It will be, and it has to be very specific to your action plan. And then now, environment within which businesses operate. So now, what kind of environments do businesses operate in? So businesses, they operate there's something called a business environment, which is uh, a weird term if we can put it like that. So anyway, now let's start with a business environment. Like, what is a business environment? What are we talking about when you talk about a business environment? But now you cannot talk about a business environment without actually defining what an environment is. So an environment refers to all the external forces which have a bearing on the functioning of a business. So hence now that deals with the first part, which is environment. Environment refers to all the external forces that have a bearing on the functioning. Let's leave it there, on the bearing and functioning. So that here will give us a definition of an environment. So now when it comes to a business environment, so now we're talking about all the external forces that have a bearing on the functioning of a business. And then our business factors are largely not, if not totally, external and beyond the control of individual industrial enterprises and their management. So now, what they're simply saying here is most businesses in this world, um, they are largely external, and you have no control. Even if you are running a business, you have no control over what happens to your business out there. I'm pretty sure you have seen there are certain people that offer certain products and people complain. Even if you offer something that you think is the best thing that you have ever done, people will still complain. Some people will come and praise you, some people will come and complain. Just showing you that it is never really enough just to deal with that. Uh, so now, when it comes to that, so there are two aspects here that to deal with there, especially when it comes to the environment. Now, we've got what they call an internal environment and what we call an external environment there. In an internal environment, this includes all factors which influence business, which are present within the business itself. These factors are usually under the control of the business, which means the business literally has got control of most of these factors there, which include one, the objectives of the current business, the policies of that business, the production capacity, the production methods, the management information system, or what they call the MIS, participation in management, the composition of the board of directors, managerial attitude, organizational structure, and features of human resources. All of these features here, or all of these factors here, they affect a business, and they affect a business in different ways. So now, if you notice that your objectives they do not work for you, you can change them. Hence, they say that these ones here, they're within the control of the business. You can change the policies, you can change the production capacity, you can change your production methods. If you need to improve maybe your output or things that, or like you want to change the products and stuff like that, you can do that. And then the management information system, which can be changed if it's not working for you. Participation in management also, the composition of the board, you can always replace the board with other people, the board of directors with other people. But this one tends to be a little bit tricky there. And then managerial attitude, the attitude of the managers can be changed also. The organizational structure can be changed. All of these things there. So now they're saying that all the above factors do influence decisions of a business, but since all these factors are usually under the control of business, they cannot be wholly included in a business environment. So not all of them can be controlled. Like as I said, that especially when it comes to the board of directors, there tends to be a little bit tricky there. But anyway, when it comes to the external environment, in the external environment here, we're looking at a few things. We're looking at these forces from outside that the business has no control over. That is what external environment is. These are forces from outside that a business doesn't have control over. E.g., you've got the customers here. Customers of an industry unit can be of different types. This can include your household, in government, industry, commercial enterprises, etc. And the number of different types of customers highly influence a firm. Like if there is one thing that actually influences most companies, is always the customers. The customers there are the ones, because remember, you need to retain them, you need to keep them, you need to profit from them. And then how do you do that if you do not listen to them? You see, so hence here when they're saying that uh, everything has to be catered around the customer. So which means whatever a business makes, they always create it around the customer. That's why even when it comes to products, when businesses are buying up, are selling products, you notice that they produce more of what their clients want than what their clients do not. So if they notice that clients like a certain product, they're going to produce more of that particular product. But the other products that are not being bought as much, they're going to produce them less and less. And then so here I'm saying that this indicates that the clients do influence a business, which is a fact. Clients influence a business a lot. And then the second group here is the suppliers. Now, when it comes to suppliers, they influence a business because now the supply of goods is basically depending on the supplier. So if let's say you've got that one particular supplier that you have, and then this supplier is supposed to supply you with certain goods today, and then they do not, and then they bring the goods 3 days later. So what happens is that here, when that happens, it actually affects the flow of your business, and it actually threatens your business. The very existence of that particular business can be threatened from the supplier side, because if the supplier doesn't take um, their work seriously, then it tends to adversely affect you. And then competitors, these ones can influence a business in a number of ways. One is they can bring new cheaper products to the market. They can launch some promotion. They can sell, like I say, sell products cheaper than you. They can even even develop a product that's actually even better than yours. See, so that's what you're talking about when you talk about competitors. They are also a factor that actually influences how you run your entire business. Then the public has different constituents like the local, the press, the media, and then the attitude or behavior of these constituents can affect business units. For example, a local population can oppose some established firm whose business is excessively noisy. Like I'm pretty sure you have seen, there's a time when Shell wanted to go and drill some gas in somewhere in the Karoo. They wanted to do that. They wanted to drill some gas in the Karoo. And people came and people toyed, led by Greenpeace. People toyed, people like complained and stuff. And the deal was done. It was signed for, I think it was during Zuma's administration back then. People that were living in that area, they toyed and they complained and everything else until the government decided to say, okay, the deal is no longer going to happen. They removed it because of the public, because the public is that much power. So the public is that much power there. And something also, like if you notice, there's this thing called news. News is basically part of the public. If the media comes and says something positive about the company, the value of the shares of that particular company increases. But if the media comes and says something negative, the value of the shares also plummets, depending on what was said there. And then marketing intermediaries, and then also these here, they play a role in developing any business unit there. So that there are those persons who reduce the distance between the producers and the agents there, e.g. A company sells its goods to help with the help of an agent, and if because of some reason all agents get annoyed with the company and refuse to sell its goods, there might be a crisis in the company, of which you get that a lot. There are times when middlemen decide not to sell certain aspects, especially when it comes to your products and stuff. And then there's a time when they'll be like, no, we're no longer working with this company. The moment that they do that, they actually inadvertently affect the operations of that particular company. Like, for instance, a very good example, a marketing intermediary for the Yeezys, this gent, what's his name, Kanye West, or yeah, as he calls himself now. So now this gent here had a very lucrative deal with Adidas at one point, and Adidas was more of a middleman in that whole process. As much as they were manufacturing the product, but they were more of a middleman there. So literally now, the Yeezy line belonged more to Kanye West than to Adidas, even though Adidas was making it, but Kanye West was like the marketer of that. So literally, he was the in between. Without him, that Yeezy doesn't sell. So with him, the Yeezy sells. So now, that one time when he said some, that anti-Semitism things that he said, and then Adidas decided and it's like, hi, we're no longer selling this. They just stopped overnight, like, we're no longer selling this, we're pulling it off our shelves. So the in-between guy decides and refuses to sell anything that is related to what this gent has. So now what happened there is the company got annoyed and they refused to sell the goods that what Kanye West has been selling for the longest time. And from there, even his net worth dropped by a huge amount. That's showing you how these marketing intermediaries operate there. They affect your business in one way or the other. And it's always good to always view all of these factors there. Remember, always view all these factors, your customers, your suppliers, your public, your intermediaries. You need to do that there. And then there's also what they call the types of the business environments there. So now, what type of business environments do you deal with? So now, the business environments that we deal with here, there's what they call socio-economic business environment. You've got the technological, you've got supplier, competitor, you've got the governments there. These are the factors that actually influence your business environment there. Now, when I'm talking about the technological environment here, they're talking about the systematic application of scientific and other organized knowledge to practical tasks. So now, one thing that we know about technology is that it changes fast, and each business has to be able to keep up with that. Because if a business doesn't keep up with technology, it dies out. Simple like that. It simply dies out. So businesses should be able to adopt the change technology in their businesses. Because otherwise, if your business doesn't do that, it will simply die out. It becomes a dinosaur. Someone comes with something better. And then economic environment. Then there is close relationship between business and its economic environment. Now, economic environment basically deals with that aspect of the economics. So, like for instance, the operations in a country, things like inflation, things like repo rates and stuff, they part of what they call the economic environment here. They play a certain role, especially when it comes to your business day-to-day running and to your input and output in the business, your overall cost of the business. There is a very, very close relationship between your business and the economic environment. And then also social, political environment. Now, when it comes to the political environment, this refers to the influence exerted by uh, the, the political institutions. Like e.g., you've got the legislative, you've got the executive, you've got the judiciary. These political institutions, they play a very big role, especially in shaping the business structure and activities. Because imagine now, if one day the legislature comes up with an act and say all business in the country are supposed to surrender 51% of their shares to the government. They are allowed to do that if they want to, but really not really allowed to. But what if they go to the judiciary and the judiciary actually allows them to do that? See, so most of these things here, they play a very important role when it comes to day-to-day running of a business there. So the political environment is paramount for the business growth. You need to understand the environment in which you operate for you to be able to be successful in that particular business that you want to venture in. If you want to go and operate in Europe, you need to understand the political structure of Europe. For instance, in South Africa right now, we do not inspire a lot of confidence when it comes to investors. We have a lot of companies that do not want to invest in us. And then one of the reasons was because of, we spoke about this one here, about the public. Like remember when Moodleys, is it Moodleys or Moodloos? Yeah, I haven't forgot the name, but something to do with Moodleys or something. Those guys, they took, they is it degraded, something like that, as to what they call the junk status. And then from there, a lot of investors have been shying away from investing in South Africa. We do not have investors. We've got a president running all over the world looking for investors to come in, but we cannot have investors coming into the country to come and invest anything. And like most of the item, it has nothing to do with the president, but it has everything to do with the situation of the country. It has everything to do with the people of the country. So now, when you're looking at all that, the political environment has played a very big role, especially when it comes to the day-to-day running of businesses there. You've got a rand that is very weak, caused by the political factors there, which also something that also affects the economic environment there, the rand that is weak there. So now when you're looking at all that, all these things, they do not inspire a lot of confidence, especially when investors are concerned. So now no one will come in and invest in anything. So businesses cannot really grow. The country's economy cannot really grow because of those aspects there. And then now, natural environment. Now, a business, an economic pursuit of man continues to be detected by nature. Okay, this is what I'm looking at here. Like businesses, they continue to be detected by nature. As to what extent this whole dependency goes to, it always depends on the businesses. There are so many aspects in how businesses are actually what you call, they're detected by nature. For instance, if you are running a company as big as Google, and then you decide to go and build your database, your data, what you call your data warehouse, let's say in Japan, and they're hit by an earthquake. That is nature literally detecting a business to you. That is literally nature telling you, like, okay, now you can plan as much as you want, but I can come in at any time. I can disturb your business at any time. I can do whatever that I want. Nature can do that. So those are certain aspects that need to be looked at, especially when it comes to running businesses. There is also that natural environment that actually takes place. But now there is a lot more, especially when it comes to the natural environment. You can always do case studies and things like that and check. And then also, then there is what they call global and international environment. This here is mostly tied up with a political environment, but also it survives also on its own. Like for instance, if you check, um, most businesses nowadays are actually affected by what happens outside there, global and international environments. Most businesses are actually affected by that. Like for instance, if the government, which is the political outside there, or um, like when it comes to the legislatures there, and then they decide to relax, let's say, certain legislatures in terms of imports and stuff, it's going to affect a lot of businesses by allowing these global companies, these international companies, to come in and offer certain products for a cheaper cost compared to what the local companies are doing. As much as it might benefit the general population, it actually kills the business side of the country. Because now, when you do that, now what happens to the business environment? The business environment now becomes more global than local. So it means you start now depending more on the things that are coming from outside than inside, which inadvertently affects us at the end. And then now, social and culture environment. Now, this one here refers to attitude of people. See that the attitude of people. This is what basically relies on mostly the attitude of people. So now, when we're talking about the attitude of people, we're talking not just attitude. We're talking about even their beliefs. We're talking about uh, education. We're talking about religion. We're talking about the role of family. We're talking about wealth and things like that. So ethical issues, social responsiveness of any business. So all of these things, they play a very important role on a business. For instance, if you want to establish a business, and then you go to, let's say, Alex, and then you go in there and then you want to sell some high end like goods and stuff. So chances are we are not going to sell much because of the type of environment that you are in. Hence, that is why if you check, even when it comes to shops, there are certain shops that you can find in certain malls. For instance, I know a couple of shops that you can only find in two malls in Gauteng. You can only find them in actually maybe two or three malls. You can either find them by Sandton City or here, what you call Mall of Africa and Mainland Mall. Only three malls that usually have got those type of shops there that you'll never find in any other mall around the country. I mean, around the province here. The reason is simple, because they cater to a certain sect. Also, even when it comes to food that is being sold out there, you've noticed that a lot of the food that is sold, they always say halal, 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 like this. So all of those things there, they look at different aspects of the environments that you're growing, that you're actually exposed to, like religious affiliations, your educational background. They actually influence your shopping and your the way that you're running your businesses and stuff. Ethical issues. There are certain things that people do and certain things that people cannot do, not because they cannot do them, but because of the ethics behind them. They will tell you, I know my heart doesn't allow me to do so, or whatever that doesn't allow me to do so. And also the social responsiveness of the business. Like, is a business a very active part of the community or not? All of these things here, they play a very, very crucial role. So, and then now, then there's this thing here, and then do a self-check here. This is up to you. You are going to go through that self-check thing there. And then before I move on here to this specific outcome two, which is a bit too long, but we'll look at that. So before I move on, let me just take a 2-minute break. Okay, let's make it like more like 5 minutes or so, and then we'll just touch on a few things and then we'll close. Just give me a couple of minutes. Okay, back guys. Do you have any questions so far?
No, sir.
Okay, so should I continue? So anyway, we're on this specific outcome 2 here. Okay, specific outcome 2. So now describe the system theory with respect to information systems. So now we're looking at the systems theory with respect to information system. So now what is the relationship between the two? Okay, so yeah, it's just something. I'm not gonna send you this slide because it has nothing to do with. It has to do with information system, but on a different perspective than the IT spec. So I just wanted to show you, like in general terms of what we're talking about here. So now, when you talk about we're saying that we're talking about here the systems theory. So that's what I just want to introduce, like a systems theory, and then we're going to come back here. So let's just look at what we're talking about when we're talking about systems theory. So now a systems theory, saying several management theories have evolved over a long period, over a period of time. So there have been many of these management theories that we have looked at. And then the systems theory is one of the important theories in management. So and then the presentation here offers understanding of the systems theory and as it relates to management. So we're going to marry it to IT a little bit later, but for now, let's manage to in terms of IT. Let's understand the background first. So now they're saying that the general systems theory was proposed in the 1940s by a biologist called Ludwig von Beta-Lamphey. And then it was furthered by something called Ross Ashby. I'm pretty sure a lot of people will know this name here. And then he's the one who furthered this particular theory there. And then Ludwig von Beta-Lamphey was reacting to both something called reductionism and attempting to revive the unity of this special reductionist there. So now, okay, the first thing I'm pretty sure most of you will be asking yourself then is what is this reductionist there? So now reductionists, they believe that a complex system is nothing but parts. So now reductionists, they simply believe that like we have to break down each and every system into its parts. And now that system here cannot exist cannot exist unless you acknowledge the parts that the system is made up of. So now, then what exactly then he meant was this, is that now a system provides an approach to understanding and analyzing and thinking about organization. For instance, here, this is what this system deals with. It views an organization as an organism that is made up of numerous parts or made up of subsystems. That must work together in harmony for the larger system to actually function. So that is how he actually fancied the system to be. So it's basically, as I said, a system theory views an organization as a large, as an organism that is made up of subsystems. That is how they view an organization there. So now these subsystems, they have to work together to in harmony. So which means they have to work together properly for the larger system to actually function. And then now these subsystems, they include departments, work groups, business units, facilities, individual employees can all be viewed as part of the subsystems in any organization. So you notice that these organizations, like most organizations, they are divided into many departments. So you've got departments that you have there, from human resources to sales to IT. Maybe you talk about flow and stuff. Like there are so many departments that you have. Then you've got work groups. Amongst these departments, there's work groups. Also, there's something called business units. There's facilities that you have in that particular place where you're working. And then there's also what they call individual employees, which is the people that are actually working in that. So all of these are part of what they call a subsystem, and all of these, they have to work in harmony. They have to work like one entire organism for them to produce that desired result for whatever that the company is looking for. And then now, the description here is that it believes that organization success relies on synergy, which means combined output. So all of these subsystems, they have to work together, and then they have what they call a combined output, and also interdependence between these subsystems. All subsystems are supposedly interdependent. There is not one that can exist without the other, but all of them, they have to exist for the other. So which means all of them are somehow connected. And then there's also something called interconnections within the organization, and between the organization and the environment. We spoke about the environments already. So that there has to be interconnections, of which we know that between the organization, between the people, the departments and stuff, for them to realize the common goal or the common objectives of the company. And also now, when it comes to between the organization and the environment, we know how much effect an environment has on a business. So which means a business has to be interconnected to an environment for it to actually exist and realize its goal at the end of the day. And then now, the characteristics of the system are communication. The communication mechanism must be in place for organization systems to exchange relevant information within its environment, provides for the flow of information among the subsystems. We know that is communication is paramount. Like without communication, a business dies, because like each and every organism or each and every subsystem needs to communicate with the other. It's like even a human body here, the hand cannot function without the head, which cannot also function without the lungs, that cannot function without the heart, that cannot, like each and everything is interconnected, each and everything is equally important. So, and then you've got the communication part, which facilitates for the communication, because all of these, they have to communicate. And then the system, subsystems, and the supersystem. Now, what is a system? A system is a set of interrelated parts that turn inputs into outputs through processing. And then the subsystem, they do the processing. And then the supersystem, now here we're talking about other systems in the environment that the system is relying on for it to perform these given functions there. And then even they've got boundaries there. This separates the system from its environment, e.g., you've got the 4 types of the boundaries that you have. You have got what they call a physical boundary, e.g., and then they say it prevents access, e.g., like these days in companies, you need to have like a tag that you carry around and things like that. And then then there's also what they call a linguistic boundary. A linguistic boundary, this is a specialized language or jargon that is used in certain maybe environment or certain structures. And then there's also something called a systematic boundary. These are rules that regulate interaction. And then, for instance, like where you've got the boss and the boss's boss and things like that, you've got that entire hierarchy. That is a system boundary there. And then you've got the psychological boundary that basically restricts what you call participation and things like that. Like especially some people, like they have very low self-esteem and things like that, and then that actually separates them from participating or partaking in different things in these systems there. And then also there are other characteristic is goal directness. Systems are goal orientated and engage in feedback in order to meet the goals of the organization. Like each and every system is supposed to have a goal at the end of the day, and that goal has to be the same as the organizational goals there. So now, if I go back here, then now they're saying that describe the systems theory with respect to information systems, because this is what we're mostly interested in. So already now we have sort of an idea of what a system is, like what a system is, what the system theory is talking about there. So now when you're looking at it like this, they're saying that here a system's work is not hard as you think. However, we have a tendency of okay, yeah, they're just talking a lot of stuff here, so I'm gonna skip that. And then here, then they're saying that there are 3 inherent properties to any system, of which we know what a system is now. And then now the properties to any system are: 1, a system has a purpose. See, each and every system has a purpose. Such e.g., the human this productive system, something like that, and then it has a purpose. And then your entire like I'm trying to think of a word. I'm trying to think of a word for the human system, for the full human system. Okay, let me just call it a human system. But now the human system also has got the human body. Actually, let me just use a human body. It has got a bunch of systems in it. So, like I just want to explain here that the system must have a purpose. Like for instance, there's something called a circulatory system in a human body. Yeah. That's why I was looking for like the flowing of blood, like circulatory system. Yep. So now, the circulatory system, its job in the human body is to circulate blood to move all over the body, from the heart to the head, using the arteries, delivering oxygen to the brain and to other parts of the body, and taking away carbon dioxide from the whole entire body and going to process it, like something like that. See, that it has a purpose. The digestive system also has a purpose. The immune system also has a purpose. There's something called also an endocrine system, also has a purpose. Like each and every system is supposed to have a purpose. So each system here is supposed to have a purpose. That's one thing that we know about systems. And two, a system is a grouping of two or more components that are held together through some common or cohesive bond. We know that a system here is supposed to be a grouping of two or more components that are sharing the same objective at the end of the day. They're sharing the same objective at the end of the day. So if it's to keep you alive, the whole point of the system is to that. If it is to purify or to regulate the functioning of the body or to regulate the temperature of the body, that is a system there. Excuse me. And then a system operates routinely. That's also another inherent property there. It should operate routinely. So now operating routinely, it means that you know exactly how a system works. It is not going to surprise you tomorrow by changing how it works. No, but a system is predictable in how it works and what it's supposed to produce. So if you see that the result that is being produced by the system is not the right result, which means that particular system is flawed, something is wrong. Same applies with the human body. For instance, if your immune system is not working the proper way, how do you determine that? You notice that you're getting sick. So the fact that you're sick, which means your immune system is not doing what it's supposed to do, something is wrong. See, hence a system has to operate routinely. It has to be a routine. It has to something that happens, and it's supposed to have something that is predictable. Everyone is supposed to predict it. That is how a system works there. Now, say all systems they embrace all these simple properties, and without any one of these, it is by definition not a system. So if a system does not have a purpose, if a system is not consisting of two or more components that have got the same goal, if the system is not routine, is not routinely or is not operating in a systematic kind of way, then it is not a system. See? So now, for our purposes, the remainder of this paper will focus on information systems. So that's what we need to focus on, information systems. Already we spoke about the systems theory, and then we have touched on the systems theory, what it is and things like that. So, and then we spoke about how an organization is divided into this bunch of systems there, and then we looked at a bunch of systems that we're working with there. And then now, then we came to to understand now that, okay, there are certain properties that have to deal with a system, and all those properties, they actually are the ones that make up a system. Because if your system lacks one of these, then it is by definition not a system. That is what has been stipulated there. So now, first up, information, data plus processing. So now, when you're talking about information, data by processing, what is information? And let's start there. So now, when you're talking about information, information is definitely different from data. Data and information are two different things. They're not the same. Data and information are two different things. Now, when you're talking about data, we're talking about raw material that is needed to produce information. For instance, your name, your surname, your ID number. That is data, because there's nothing I can do with that. But once I take your ID number or your name and your surname, and I decide to break them apart and decide to put that information somewhere. And then, for instance, your ID number there, that number, the seventh digit in your ID number, that indicates your gender, whether male or female, and things like that. So now you notice, now once they start doing that, they start separating that information. Now they start separating those details there. Now you start having something that is called information. This is where we start when it comes to information there. Data by itself is meaningless. It's useless. You can't use data. It is simply a single element that is used to identify, describe, quantify an object used in business, such as a product, order, an employee, like you see an employee, which is you in this case here, or a purchase or a shipment, etc. So that is what we simply use like a data. Like data can be anything. It's useless if it is not properly dealt with. But once you take that data and then you break it down and then you use it to do something, which is in this case called processing. What you take that data and you process it. Now, when you process, then how do you process the data? You process the data by specifying how, like by giving it sort of like specifics in your desired outcome. Like for instance, okay, I need to know how many females are here. So I'll just take a bunch of ID numbers that I have. I'll look at the seventh digit there, then I'll check. Then I'll be counting there, okay, the digits that are less than 5 and the digits that are 5 and more, male, less than 5, female, and then from there, now I've started separating. So I do not have data anymore. Now I have more information than data. See, so this is where we're going to start. This is a lot of items to deal with, and I think I should stop now because there's a lot of information that we need to deal with this tomorrow. So tomorrow we're taking this and we're finishing everything. I think, yeah, it should be done by tomorrow, this whole thing, yeah, or between tomorrow and Thursday, we should be done. So do you have any questions so far regarding the stuff that you have looked at and what we've been talking about? Do you have any questions, guys?
No, sir.
Okay.
No, sir.
Okay. All right. So I think today we can end here. If there's no more questions, then I think we can close the session. We'll talk tomorrow then. We'll talk tomorrow then. Okay, guys. See you tomorrow. Have a good day.
Thank you, sir. Bye, everyone.
Thank you, sir. Bye, sir.
Mr. TC, bye.
Bye, sir. Thank you.
Thank you, sir. Bye, everyone.
Bye, Mr. TC. Bye, everyone.